Dear all, a very good evening to all of you. GST Council. The GST Council was established to govern goods and service tax laws. The GST Council refers to a joint forum of the center, state, and union territories to make recommendations on crucial GST matters to the center, state, and UTs, which ultimately helps to amend and bring new dimensions in existing laws. I, Advocate Achal Srivastav, welcome all our attendees to today's session on Insights of 48th GST Council Meeting. Today, we have with us CA Atul Gupta ji, past president of ICAI and an expert in indirect taxation who needs no more introduction. So, without taking much time, I would now like to welcome Atul sir and request him to enlighten us on today's topic.
Thank you, Achal, and very good evening to all my colleagues here. Friends, as rightly mentioned by Achal, that the day before yesterday, there was the 48th GST Council. And you are aware that now the annual budgets have the little importance, because it's practically that every month, whenever there is a GST Council meeting and they are taking certain decisions, practically there are a lot of amendments which are getting introduced on a month-to-month basis in the shape of a GST Council, because the government acting very proactively for the benefit of all the SSCs. They are amending the law time and again so that all the support and the necessary ecosystem for doing business should be there. And in that series, this 48th Council meeting also brought in many changes, specifically in relation to the penalty provisions, which are very, very important for the large number of SSCs. So friends, I will be discussing around 18 changes which are going to implement into the GST system. They are announced, and very soon the notification and the circular related thereto will be issued by the department in due course. The first change which is there related to the change in rate of tax and vis-a-vis the RCM activity. There is a product called husk of pulses, including the chilka and the concentrates, including chuni and churi, khanda. So earlier the rate of this was 5%, and now with the notification will be issued, the rate will become nil. So now it's presently it's a 5% rate and it will become nil rated. Similarly, the ethyl alcohol supplied to the refineries for blending with motor spirit, that is petrol, the rate of the same is 18% presently, and which will be reduced to 5%. And also the same will fall under the reverse charge mechanism. So this is the first change as far as the rate of tax is concerned, and the applicability of the reverse charge mechanism for the Mentha awarenesses. Now, my dear friend, coming to the second change which is being announced by the 48th GST Council, is in relation to the compensation cess. Friends, you are aware that when you are buying the SUV, there is a compensation cess, and now the compensation cess for the SUVs will be 22%. So I believe that that will make the vehicles little more costlier. Yes, it is there for protecting the environment, and the 22% cess will be applicable on the fulfillment of the 4 conditions. That number 1, the vehicle should be SUV. Number 2, it should exceed the 1500 cc. So if the vehicle is less than 1500 cc, even if it is SUV, this higher compensation will not be applicable. So the vehicle will be more than 1500 SUV. Number 3, the length of the vehicle should exceed 4000 mm. And finally, the ground clearance should be more than 170 mm. So my dear friend, these are the, I will say, the special conditions when, if the SUV will fulfill all these 3 conditions, that it's a SUV 1500 cc, more than 5000 mm is the length and the 170 mm is the ground clearance, then the compensation rate will increase to 22%. So that's the second change which I wish that we should be aware of. Number 3, that my dear friends, you are aware that the prosecutions. So there is always a challenge for the SSCs. Number 1, that because as per the law, it is being provided to us that the credit will be available to the SSC only and only if, as per the section 16, the supplier has paid the tax to the government exchequer. So if you are buying something from a supplier, you will be entitled to claim the credit only if the supplier paid the tax to the government. Now, there are the 2 amendments related thereto in this 48th GST Council. Rather 3 amendments which I will be sharing with you. Number 1, about the prosecution. Number 2, for the initial period of 17-18 and 18-19 when the 2A was not there. And number 3, that the buyer who is buying the goods was always in a worry whether the supplier has paid the tax or not, because you paid the tax to the supplier. But whether the supplier paid the tax to the government exchequer or not, you are eligible to see the 2A GSTR 1 of the supplier, but you can't see the 3B, and because of that you are always in a fix, whether the supplier has paid the tax or not related to your transaction. So everybody was looking for a mechanism to see, to trace whether the supplier has paid the tax or not. So my dear friends, on all these 3 fronts, the 40th GST Council meeting brought the welcome changes. Number 1 is about the prosecution. So you are aware that whenever there is a case of launching the prosecution for any tax evasion, kind of that, okay, if the government has an allegation, the department has an allegation that there is a tax evasion, and the tax evasion is ranging from 1 crore and above. In that case, the provision related to prosecutions were there. And yes, it was there that, okay, in case the amount is less than 5 crore, it will be a bailable offense. But the prosecution provisions were there. But now, my dear friend, this 1 crore limit has been increased from to 2 crore. Meaning thereby, if the amount sought to be evaded, or there is an allegation that the amount sought to be evaded is less than 2 crore of rupees, then there will not be any prosecution provision. And the prosecution provision will start only after 2 crore of rupees. Again, it is a bailable up to 5 crore of rupees. Now, my dear friend, there is an exception for this 1 crore, 2 crore when there is an issue related to the fake invoice. So if you have anything else, for example, you collected the tax but not paid the tax, and the amount is less than 2 crore rupees, there will not be any prosecution. But if the issue related to the fake invoice is there, that the buyer has claimed the credit on the basis of the fake invoice, then the old limit of 1 crore will remain applicable. It will not be the 2 crore. My dear friend, is apart from that, there were certain offenses which were being called as criminalized. Criminal offenses were there. For example, there is an allegation on the SSC that he is preventing any officer from discharge of his duty, or deliberate tampering of the evidences, or failure to supply certain information the department asked for. Now, my dear friend, these 3 offenses were having a lot of subjectivity. And that's why the very welcome change is there in the 48th GST Council meeting, that they amended they proposed to amend the provision in such a way that all these 3 offenses will remain outside the in the category of the offenses, meaning thereby there is a decriminalization of the offenses related to the number 1, as I again repeat, obstruction or preventing any officer to in discharge of his duty. If, say, for example, the officer is saying that you are obstructing in performing my duty, there is a search or something like that, and if you are, the officer is saying that, okay, you are obstructing me, and I will start a prosecution proceeding against you as well. So now that will not be there at all. Then the deliberate tampering of a material evidence and the non-supply of information. Now, my dear friend, coming to the 4th change, which is again a very, very important change, and it will have I will say a little bit of an illustration to explain you. Now, my dear friend, what was happening that in case of, say, for example, you are taking a flat from a builder. Now, if you are taking a flat from a builder, you are a buyer, you are a consumer, and you are an unregistered person. Now, in this case, say, for example, there was an amount which was charged by the builder from you, But now the builder wish to give you a credit note. Okay, the builder wish to you a credit note because of the rate of the product got changed or something else is there. Now, as you are aware that for a GST SSC, issuing a credit note is always having a time limit. That okay, by the 30th of November, you have to issue the credit note related to the previous financial year. Now, for example, after 3 years, if this is the case, okay, now there is a 3 years after this, this is a case, or otherwise, I will say a contractee is there. Say, for example, a hospital is getting constructed by a contractor. Now, after 3 years, there is a confusion that okay, whether the price is 1 crore or the 90 lakhs, and the contractor will wish to issue a credit note to the contractee that okay, I charge 1 crore GST on the 1 crore rupees. Actually, it should have been on the 90 lakhs and on the 10 lakh rupees. I am paying you back the 10 lakh rupees, but on the GST portion of that 10 lakh rupees will not be available, though it will be a credit note issued, because the time limit to issue the credit note expires. Now, in that case, the hospital will get the refund from the contractor for rupees 10 lakhs, but 1,80,000 rupees paid on the construction service obtained will not be available to the hospital because of the reason that the credit note limit expires. Now, my dear friend, this 1,80,000 rupees can be claimed as a refund from the department by the hospital, and for that there will be the necessary enabling circulars and the provisions will be introduced in the meantime. So, my dear friend, this will be a welcome change when, because of the limit prescribed for the credit notes expired, the benefit which should have been available to the unregistered buyer now will be available in a shape of a refund from the department. So this is a welcome change, which I believe will give a fair play to the seller and the buyer, that in case there is a time limit to comply with the law, you are not able to, then also the benefit will be available to the, at least to the buyer, who should not suffer because of the legal provisions not followed by the supplier. Now, my dear friend, now the next change is about the, again, a very welcome change for ease of doing business, but it is now, it's actually the benefit which would have been available from the 1st of January, now will be available from the 1st of October. That is the sale of goods in an interstate. So say, for example, I am based in Delhi and I want to sell the goods in Haryana. I am an unregistered person, I am a composite dealer, and I want to use the service of an e-commerce operator. Now, as you are aware that in case I wish to sell my goods through the e-commerce operator, I am an unregistered or a composite dealer. In that case, I can't sell outside the state. So either I have to take the registration in Haryana, or I will not be able to sell the goods through the e-commerce operator from Delhi to Haryana. So the government wished to facilitate this, facilitate the dealers by providing the enabling amendments in the law vis-a-vis the GSTN as well, so that the unregistered person or a composite dealer can also sell interstate. But because the system is not ready, now the scheme which was supposed to get implemented from the 1st of January will be now applicable from the 1st of October 2023. So there is a setback to the composite dealer and the unregistered person, that they have to wait 9 months more to get the scheme implemented, so that they will be able to do a interstate supply, even if they are the composite, they come under the composition scheme or unregistered, and they want to do the business through the e-commerce operator. Now, my dear friend, there is another amendment related to the high C sales. That is under the Schedule 3. The 6th amendment which I wish to share with you. You are aware that Schedule 3 speaks about the activity which are neither being treated as a supply of goods nor supply of service. Now, in this particular case, under the Schedule 3, they have given us the high C sales are falling under the Schedule 3 from the 1st of Feb 2019. They clarified, they inserted the particular high C sales from the 1st of Feb 19, that the high C sales is neither a taxable supply of goods nor a supply of service. Now, what is high C sales? Everybody is aware, but still for the benefit of my viewers, I just wish to convey you that if, say, for example, you are an Indian SSC, an Indian citizen, you are buying the goods from a X country and you are selling the goods into the Y country, without they enter into the custom boundaries of the boundaries of India. So it is a high sea sales that, okay, you are selling from one country to another country, both are outside, and the goods never enter into the territorial water or the custom barrier of the country. In that case, that is called high seas sale. Now, my dear friend, high sea sale is not taxable as clarified from the 1st of Feb 2019. But there was certain challenges for the earlier period from the 1st of July 2017 to 1st of Feb 2019. And because of that, there were certain litigations going on. Now, to address all those litigation, to rest all the litigation related thereto, the government proposed to amend the high sea sales provision from a retrospective date, that is from the 1st of July 2017 rather than 1st of Feb 2019, meaning thereby from the day one, the high sea sales were not taxable, but at the same time, the notification, the press release of the 48th GST Council meeting clarifies that there will not be any refund granted for the intervening period. That, okay, oh, you are having a litigation from the 1st of July 2017 to 1st of Feb 2019. And since we are giving a retrospective benefit, so you want a refund for the whatever the amount you have paid during this period. So they mentioned that no refund will be given for the intervening period as well. Now, my dear friend, coming to the seventh change, and the seventh change related to the retaining the input credit so claimed. I used to say that there are always three terms into the GST ITC system. Number one, that the availment of credit. Number two, the retention of the credit. And number three, the utilization of the credit. Section 16 gives us the 5 eligibility criteria to avail the credit. That the credit should be related to your business. You should have a valid document available with you. Number 3, that the supplier has paid the tax to the government exchequer. Number 4, that you have received the goods or services mentioned on the invoice. And number 5, that you have filed your GST return under section 39, meaning thereby the 3B. So if you are fulfilling all these 5 conditions, you are eligible to claim the credit of the same. But if you want to avail the credit, you are eligible to avail the credit. But now, my dear friend, in case you want to retain the credit so availed by fulfilling all these 5 conditions, you have to pay within 180 days from the date of invoice to the supplier as well. So if you are not paying, say for example, the invoice is dated 1st of January, you received the invoice on the 15th of March, you claimed the credit on 15th of April. The 180 days will be calculated from the 1st of January, not from the 20th of April when you availed the credit. So from the 1st of January, within 180 days, you have to pay, say for example, 27th of June. You have to pay before 27th of June to take the benefit of the ITC so claimed on the 15th of April. But my dear friend, if you are not able to pay within 180 days, then you have to reverse the credit so availed along with the interest. Now, my dear friend, at times you are paying the half of the money within 180 days. So there was a confusion whether that if you are not able to pay within 180 days, you pay only half of the money. So whether the full credit will be reversed or it will be the half credit. So now, by virtue of this 48 GST Council meeting, they clarified that in this kind of a situation, only the half of the credit or the portion of the amount which you are not able to pay within 180 days, you are supposed to reverse the credit, not the entire amount. So say for example, you got the invoice of 1 lakh rupees, 18,000 the GST you enjoyed, you availed. You are not able to pay you say for example, you are able to pay only the 60,000 rupees in the 180 days and 40,000 rupees is still pending. In that case, you have to reverse only the portion related to the 40,000, that is 7,200 rupees you have to reverse, not the entire 18,000 rupees. Now, my dear friend, coming to the 8th change, which I again wish to convey you, that this is in relation to the, as I mentioned you, that the credit as given in the section 16 subsection 2 clause C, that the credit will be available to you only and only when the supplier has paid the tax to the government exchequer. Now you purchase a goods of rupees 1 lakh rupees, 18,000 rupees you pay to the supplier. How you will assess that whether the supplier has paid the tax or not? you have the only one option right now available, that okay, you have to see the 2A or the 2B. If the amount is getting reflected in 2A, 2B, you are taking the credit because the supplier filed the GSTR1 and the GSTR1 got the corresponding entry into the 2A, 2B, meaning thereby if the amount is getting reflected in 2A, 2B, you are eligible to claim the credit of the same because that is the only option available to you. But now, my dear friend, there was always a catch, because if the supplier will file the GSTR1 but correctly, but manipulated the GSTR3B in one or the other way, then you have no clue of, or you have no evidence available with you that whether the supplier has actually paid the tax to the government exchequer or not. So that's why you are always in a dilemma, whether I should take the credit or not, from whom I should buy. It's kind of I used to say on a lighter side that it is always kind of an investigation that whenever you are buying from somebody, you have to investigate the background. You have to do a background check of the supplier. So that's always a very difficult proposition. And now, looking into this kind of a scenario, after a lot of representations given by each one of us, now the government is coming on a very, very welcome change, that they will provide a mechanism as well, wherein you will be able to assess, you will be able to check the 3B or the other details as well, so that you will be able to see, you will be able to assess whether the supplier has actually paid the tax to the government exchequer or not, so that whatever the credit you are claiming based on the 2A, 2B, that is a legitimate credit. So ultimately the matter will end that if you will be able to cross-check whether the supplier has paid the tax to the government exchequer or not. So my dear friend, this utility will be a very, very for the interest of the buyers who are always in a suspicion that okay, the supplier has paid the tax to the government exchequer or not. Now, my dear friend, coming to the 9th change, that is in relation to the appeal, that you are aware that under section 109, we are there to file the appeals and other provisions related to it there too. Now there will be a one insertion in the section 109, that is 109C, wherein they will be prescribing a form where you can withdraw the appeal as well. So, for example, you filed an appeal maybe because of one or the other reason, and that reason got settled over a period of time because of the new jurisprudence came. Something, for example, you are of the opinion that okay, my case is there, I have to fight this case because my activity is not taxable. Later on, some notification came or some judgment came from the higher court, and that decided the matter that okay, no, it's a taxable activity. You paid the tax along with the interest also because you don't want to continue the meter of the interest is going on. Now, there is no purpose of continuing with the appeal as well because you paid the tax along with the interest. Or there may be a vice versa. There may be a vice versa that the department filed the appeal and they feel that okay, later on the appeal is infructuous. In that case, there was no mechanism to withdraw the appeal. But now under the section 109 subsection C, they are inserting a particular provisions and the specific form wherein the assessee or the department, as the case may be, can also withdraw the application for this application to reduce the litigation in the overall interest of the system. My dear friend, now coming to the 10th change, which I feel that we should be discussing, and that is related to the cancellation of a registration related to the TDS or TCS. My dear friend, you are aware that under the section 52 vis-a-vis the rule 12 that of the CGST rule, in case you have a TDS or TCS related registration, it was only the department officer who was empowered. The proper officer was having the empowerment to cancel your registration. In case you want to go for a suo motu registration cancellation, it was not there. And that was giving unnecessary, I will say that the procedures or the unnecessary workload on the assessees, who later on feel that okay, the TDS or TCS is no more applicable to them and they want to surrender their registration. But that voluntary surrender of the registration was not available. But now, my dear friends, there is a proposed change that facility will also be made available to the assessee, that if they feel that they want to surrender their registration related to the TDS or TCS, they can apply for the same. And for that, the necessary amendment in the rules will be inserted in the due course of time. My dear friend, the next change is in relation to the supply, place of supply, and that is for the transportation of goods, specifically in relation to the exports. Now, when you are looking for a refund related to the transportation of goods, there is always a litigation, the place of supply, where the place of supply will fall. And specifically in relation to the transportation of goods, when the goods are going outside India. My dear friend, in the proposed amendments, after the 48th GST Council meeting, they wish to clarify that aspect also under section 12 subsection 8 of the IGST Act 2017, that the necessary clarification will be given so that ultimately the refund applications and the other related aspect will be taken care through that amendment. Now, my dear friend, as I shared with you that the third important amendment related to the availing the input tax credit, I shared with you that under the section 16 subsection 2 clause C, you are eligible to claim the credit only and only when the supplier has paid the tax to the government exchequer. I explained to you that there was no mechanism to check. That will be introduced. Then earlier to that, I shared with you that at times you have a challenge. At times you have a challenge related to the same as well, that you are not able to, there was a prosecution and there was a penalty provision related thereto. And now number 3, that you are aware that the GSTR 2A was not available in the year 2017-18 and 18-19. So whatever the credit you claimed based on the 3B, that should have been the finality, that should achieve the finality. But now later on they introduced the 2A and the assessees are getting a lot of notices under section 74, that is the invoking the extended period. Say for example, they are issuing the notice in 2022 for the year 2017-18, saying that the 2A is not matching with the 3B. And by virtue of that, there was always a kind of a litigations going on. The assessees were saying that, okay, 2A was not there. How I will be able to assess? How I will be able to check? So it will be a bona fide mistake, even if it is a mistake, because I am not aware whether the supplier has paid the tax to the government exchequer or not. So how I will be able to? And now you are saying I was having a malified intention. Why I am saying so? Because the section 74 can be invoked on the assessee, meaning thereby the demand for the larger period, the demand for the 5 years can be raised on the assessee only and only when the department will say that there was a malified intention, there was a suppression of fact, there was a fraud, there was a collusion. Then only the demand for the 5 years can be there. Now, if the 2A was not there, I believed in the 3B, whatever the credit was available to me, how you can say there I was having a malified intention? And this point of yours was appreciated by the 48th GST Council meeting. Thanks to the Honorable Finance Minister and all the Finance Minister, the part of the GST Council, that they appreciated this aspect and they are going to issue the necessary instructions that the demand under section 74 cannot be invoked, cannot be raised. The section 74 cannot be invoked, and the demand will be only under section 73, meaning thereby for the normal period. And normal period means that they will be raising the demand maximum for a period of 36 months or 30 months, as the case may be, because of depend on the nature of the section. So now all those demands related to 17-18 and 18-19 practically will become time barred, because the demand under section 73 cannot be there for that particular period. So my dear friend, this is a very, very important welcome change which will be introduced and which will help a lot of reduce the litigation related to the initial years of GST. Now, my dear friend, coming to the 13th change, and that is in relation to the e-invoicing. You are aware that under the rule 48 sub rule 4, they have given us a category that, okay, for the e-invoice is applicable for everybody beyond a threshold of turnover, but there are certain exemptions available that, okay, the XYZ will not require to issue the e-invoice. Now they propose that there will be a further amendment to the rule 48 sub rule 4 to give a further list of exemption that who will not be required to issue the e-invoice. The rest, let us wait that, okay, who will all get out from that particular requirement of a e-invoicing. My dear friend, now coming to the certain aspect related to the streamlining of GST, or I will say the reduction, to reduce the evasion of the tax or misuse of the provisions. Now, my dear friend, you are aware that at times there are the misuse of PAN number of one or the other guy. So somebody misuse the PAN number of X to obtain the registration and then issue the fake invoice. And later on, it came to the knowledge of the department that, okay, the guy who is not aware that his PAN number is being used for taking the registration with the GST department. Now, my dear friend, there is a pilot project which initiated by the government in the Gujarat through the biometric Aadhaar authentication. And I believe that very soon the same will be, once that will be a successful, that will be implemented everywhere in the country. And then there will be the lesser occasion of misuse of PAN number. At least there will be only a deliberate misuse. There will not be any, I will say, the unaware misuse of the PAN number of the citizen of the country for any kind of a GST fraud. So there is I will say, the procedural amendment which is being introduced by the government, will be introduced by the government after the successful testing of the pilot project in the Gujarat. My dear friend, you are aware that at times you are filing the return, say for example, the annual return or the return for the purpose of the TCS and even for the section 39 or ISD as the case may be. So right now there are the certain relaxations available that, okay, you can file the return up to like this. So there is always a relaxation, but now they are saying that there will be a restriction that maximum 3 years from the due date of filing of the relevant return will be available. So after 3 years, you will not be able to file any return from the relevant date, and that will be a restriction. Overall restriction will be imposed apart from the various extension of the due dates will be there, but that will be within the 3-year restriction which will be there in the law books. My dear friend, coming to about the last 3 changes, that is change number 16, I am going to share with you. And that talks about the differential amount. Say for example, there is always a litigation that the GSTR 1 turnover saying something else, the liability is saying something else, and vis-a-vis the GSTR 3B. And later on, the litigations will be there. The department will issue the notice. The SSC will comply with that, and so on. But my dear friend, now they are going to introduce the amendment through the GST, and in such a way that whenever you will be filing a GSTR 1 and then GSTR 3B, in case there will be any difference, that will be getting intimated to the department that will be getting intimated to the SSC immediately, along with the requirement that, okay, you have to explain the same as well. So say for example, you have a difference of 20,000 rupees because, say for example, you raise the invoice for the same, but you are not supposed to pay the tax because of the n number of reasons in the same months, or there will be a old liability you are paying in the GSTR 3B as compared to the GSTR 1, for which relates to only the current period billing. So now there will be a difference. Now, the difference will be there. You will file your return. The department will issue a notice. Oh, why this difference is there? So you are not able to give the reasoning of that difference in the return itself. Now, under the amendments which are being proposed, the SSC will be allowed to give the reasoning of the differences as well, so that there will not be any requirement by the department to issue the notice and ask for the detail. Once they are asking the detail, you are submitting the detail, and then they are asking some other details. So practically, it's an unnecessary time-consuming exercise happening both the sides. And there is always a chance of harassment as well. So now, to reduce the litigation and reduce any kind of a difficulty for the genuine SSC, the department, it is being proposed under the 48 GST Council meeting that the necessary amendment in the returns forms will be introduced. My dear friend, coming to the last 2 changes, one is the renting of residential property for use as residence. My dear friend, you are aware in the recent amendment, the 47th GST Council meeting amendment, there was even before that, there was an amendment in the renting of residential property. property for use as residence, meaning thereby. So in the notification number 12/2017 related to exemption, we had a exemption related to renting of a residential property. Number one, it was that the renting of a residential property for use as residence was exempted. So meaning thereby it should be a renting. Number two, it should be a residential property. Number three, it is a residential use. Later on, there was an amendment introduced that yes, no problem at all, this will continue. But in case a registered person with the GST department is taking that property, in that case, it will fall under the exemption will be withdrawn and the registered person has to pay the tax under reverse charge mechanism. So say for example, Mr. X is there who is registered with the department, is taking a residential property for use as a residence, but is being taken by X Limited. Rather than limited, I will say the X as a proprietor. In that case, since the X proprietor is a registered person, the activity becomes taxable and the X proprietor has to pay the tax under reverse charge. Now that creates a lot of difficulty for the proprietors or even the partnership firms because they are taking the property for the residence of its proprietor or the partners. And even for the purpose of the director's residence. Now, my dear friend, the 48 GST Council meeting offers a welcome change that in case this ex proprietor is taking the property for his personal self-use, personal residence, in that case, the exemption will again be restored. So, my dear friend, in case the X is running his office on that particular property, okay, or he is using that property for, say, for example, for running a PG, in that case, the exemption will no longer be available and X proprietor has to pay the tax under reverse charge mechanism because he is not using that property for his self-personal residence or he is running the paying guest accommodation over there. But in case the X proprietor is using that property for his personal residence, then the exemption will be restored and there will not be any taxability in this particular case. So my dear friend, it's a very, very important change which everybody should be aware that the X proprietor, if using the property for his personal use, then the exemption is available. If X proprietor is using that property for a further letting out, in that case, it will be subject to the GST and under the reverse charge mechanism. My dear friend, last change that you are aware, the banks are getting a lot of incentive for selling the RuPay cards or the Bhim UPI. And whatever the incentive they are getting, there was a litigation going on that whether it will be subject to the GST. Notices were issued. But now, my dear friend, as clarified by the 48 GST Council meeting and necessary notification and the clarities will be issued, that this amount will not be taxable, being the same will be treated as a subsidy only. So, my dear friend, this is all the 18 changes which are going to implement in our system by virtue of various notification and the circular or the clarities which will be issued in the times to come. These were the important 18 changes which I wish that everybody should be aware of so that the necessary intimation to the assessees by our professional colleagues should be there so that the assessees are also aware that, okay, what all changes are they are going to implement. I have received the 2 questions from CA Gaurav Gupta ji, whether high C sales need to be reported under GST or 3B under non-GST supply. The answer is yes. And the Lalit Garg ji is asking a question, in case of a property is taken on rent by Mr. X for his business purpose and is registered under GST, does it mean the registered person need to pay tax on reverse charge mechanism? The answer is yes. So if the X is using for the business purpose, say for example, for letting out or for running a PG, then the activity will still continue to be taxable and under the reverse charge mechanism. Lalit Garg ji is asking a question, can you please explain again the decriminalization under GST? My dear friend Lalit ji, just I wish to share with you that the decriminalization, you are aware that in case there is a allegation that some refund has taken wrongly or there is a tax evaded or sought to be evaded in relation to the input tax credit. So presently in the present mechanism, if the amount sought to be evaded is more than 1 crore of rupees, there is a prosecution provision applicable. Yes, as I mentioned you that up to 5 crore of rupees, that offense is a bailable offense. But from 1 crore to 5 crore, it is a bailable offense. From 5 crore and above, it is not a bailable offense. Now, my dear friend, this 1 crore has been increased to 2 crore of rupees except with one exception, that in case it is a fake invoice case, that the matter relates to the fake invoicing, then the limit will be there as it was originally 1 crore of rupees. The another three aspect about the decriminalization of offense are in relation to the three type of subjectivity, that the officer is saying, officer is alleging you that you are obstructing or preventing me in performing my duty. Number two, that you are deliberately tampering the evidence. Or number three, they are saying that, okay, you are not supplying the information as I'm looking for. Now, these are always subjective in nature because you have supplied certain information, but the department is saying, no, I am not satisfied. So let me initiate a criminal proceeding against you. Or he's saying that, okay, you are unnecessarily obstructing me in performing my duty. So there is always a subjectivity involved into this, which may go in this side or that side. And that's why it is being proposed under the 48th GST Council meeting for all these three type of offences. There will not be any they will not be treated as a criminal offence, meaning thereby there will be a decriminalization of the offences for on these three fronts. So thank you very much to everybody. I received few questions. I try to answer each one of them. With this, let us close this session and over to you, Aanchal. Once again, thanks to the team Taxo for giving me this opportunity to come and share of my thoughts related to the recent amendment or the recent recommendations rather than amendment by the 48th GST Council meeting. Over to you, Aanchal.
Thank you, sir. Thank you for a wonderful deliberation and giving us a detailed overview of 48th GST Council meeting held on 17 December 2022. Still, if anyone has any query, can drop the question in the chat box. We'll wait for a minute and then we'll close the session.
There is no query, I believe.
Yeah. So with this, we have come to an end of today's session on the most prevailing topic in the area of indirect taxation. I hope you all found the session informative and insightful. I would like to thank Atul sir for his valuable time and for sharing his wonderful insights with all of us. We, the team Taxo, thank you everyone for being part of the session and making it a successful one. Once again, thank you everyone.